The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft bear, David White. Once again, we're go into the breach, dear friends, and we always meet here between 2 and 3 each trading day.
The following takes place between 2 p.m. and 3 p.m.
It does. And, of course, we've got a market already in progress. If you missed Friday's exciting BAFO edition of the Power Trading Hour, I said I was about as bearish as I could get. I didn't know how bearish until someone posted something in the Tiger's Den today that added one more layer of bearishness. And that is, I said I was kind of a polar bear that ate a grizzly bear. And I went down through all the bears, but I forgot the panda bear. So we're now adding that to the list. I am as bearish as you can get. That is a polar bear that ate a Kodiak bear that ate a grizzly bear that ate a brown bear that ate a... Everybody loves the panda bear, don't they? Whatever. Anyway, a turducken of bearishness, as we said on Friday. We are off 46 points on the S&P cash. We've had a bounce up off the lows, but didn't seem to do much. Tracking in at 3.35 billion shares on the New York Consolidated tape. And I am short and loving it. What else can we say out here? Other than that, just time to get the party started.
That it's all just a little bit of history repeating.
It is. It's history repeating all over again. In 1971, after nearly a decade of preparation, the NASDAQ market opens for stock trading as the National Association of Security Dealers automated quote system displays its first median price for more than 2,500 over-the-counter securities. The NASDAQ Composite Index is set at an initial value of 100. So when everybody thinks about the NASDAQ, it was today in 1971 that it all got started. Now, of course, you can't, I almost think that if I was, in fact, I'm going to have to set up a segment that if I was president or if I was king, I think king would be better. Then I could do more things, right? I wouldn't have to just do some kind of executive memo to get what I wanted. I just have to say that's what it was, and everybody would have to bow before me as it should be. Anyway, I even forgot where I was going on that. I'm going to have to write that idea down, though. If I was king. Oh, David for king. That would be it. King David. I think that sounds almost biblical in some senses. Anyway, great day for the NASDAQ, as it was the day that it was born. And, of course, this month is the month that my mother bored me. I always love that Benny Hill joke. Anyway, we're going to go on to bigger and better things, and we'll talk about individual stocks and sectors and indexes probably at the bottom of the hour. A lot of things on my mind over the weekend. Of course, I'm short. I'm sitting on my hands. I'm not going to be getting into the nitty-gritty of what's going to happen in the next 30 minutes. I don't think that the big money is in that. The big money is going to be sitting on my hands and not betting on individual fluctuations, but on the medium and long-term trend of the market. So we'll continue to focus on that. Andy Heck, my good friend, my brother from another mother, and a resident of Sin City, Las Vegas. We were talking last week before we got really into a lot of stuff. I had already started talking about the problem with the banks in Europe and started to dig back into them, and then later had more confirmation Tuesday night by a rather famous macro call guy. But we were talking about there, and in fact, we talk quite often, and almost kind of like really bad movies of the adult persuasion. Sometimes I will come up with a catchy title, and the article for Andy Heck takes off from there. He has a very good article just based on a headline. Mine was that commodities were the hanging judge. I kind of looked at it that way, and of course, a title becomes a pretty good article out on Seeking Alpha today. If you need the link, just email me at path@tfnn.com, and I will send it to you. But here's just a small snippet from Andy's article. Commodity prices are becoming a noose around the necks of banks and financial institutions around the world. To complete matters, emerging markets and economies of Russia, Mexico, and Brazil, all large commodity producers, have suffered in the raw material bear market. The currencies of the nations have swooned, and the chances of defaults have risen. And probably a very good way of putting it. But to me, when I told him that the commodities were the hanging judge, I think Andy instantly got where I was going with it. I didn't and couldn't write a article like he did, very well thought out. I tend to think a lot more stream of consciousness. So you got to kind of take me as you get me. But he spends a lot of time writing these articles. Very good article. But I actually had read another article that really made it all come home to me as why the problems we're seeing now are going to probably continue for some time to come. And that is because all the fiddling that central bankers have done, including treasury departments around the world, have caused all kinds of unintended consequences. As my friend's very devout Catholic mother always told me as kids, the good intentions are the route to hell. How did he say that? How did she say that? Good intentions are something like that. Good intentions are the road to hell. Anyway, they can have all the great intentions they have, but in the end, you end up with all these unintended consequences. I've talked for over a year and a half about the $6 tomato in Brazil, the other problems that have come out. And not until I actually started looking through some stuff, because I was shooting my mouth off, as I often do, and hadn't read some of the books that were the underlying fundamentals of capitalism. But I read two of them over the weekend on Saturday, actually, and I can speed read pretty quickly. Anyway, getting into both capitalism and socialism, I kind of got the answer of why we're really in these problems now. And it hit me with one paragraph. When we come back, I'll talk about why Coke can teach us about markets and commodities. Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Got a lot of email. We'll be answering that after the bottom of the hour as soon as I get done with the snooze. And at least somewhat of my opinion. But it kind of hit me, and I wanted to think about it and talk about it, why it was fresh in my mind. Because my mind can sour just like milk, just that quickly. Anyway, we were talking about the commodities and the hanging judge. If you just joined us, Andy Hecht wrote a pretty a good article. In fact, a lot of nice comments. Normally, a lot of hate mail on Seeking Alpha. if you don't please everybody with your article, but it kind of hit me because I'd been reading articles on both capitalism, or books on capitalism and socialism, and basically more market theory than anything else, and what happens when you do and don't have a market. But there was a great part of a book that Williamson wrote, and it was talking about Coca-Cola and prices and what price tells us, and the feedback mechanism of price in a commodity. And maybe commodity is new Coke. Anyway, he was talking about new Coke was the most highly engineered, polished, researched, lovingly refined, focus groups, test-marketed product of its time. Socialist governments are not the only organizations whose planning efforts find themselves nullified by the market, which is to say, by reality. Coca-Cola US had everybody from food scientists to psychiatrists working on what they codenamed in military industrial style Project Kansas. All the best minds told them New Coke was going to be a smashing success. But what he gets into in the next couple of pages of his book, in fact, if you want to link to the book, I think it's he's put it on YouTube. You can listen to it. I think it's like 16 chapters. Not that everything is correct or that I say that everything is right. There's weaknesses in all systems. But what he really gets into in the book is the problems with price discovery. And that is when you start monkeying around with all kinds of things like interest rates and continue to leave them on over time, prices do not reflect the reality underneath them. And what we are seeing now, although he does not say it, but he basically intimates this in 2010 when he wrote his book, that the longer that you allow prices to drift from any kind of fundamental underlying market, the more they're going to snap back and bite you in the end. But really what they can do is drift away from any level of reality. And the reason I think I was so knocked over by rereading this book, although I'd read it several years ago, was all the work and discussion that he put on how price is a mechanism and feedback mechanism for the markets, and that the longer that you let them go becomes problematic. So the destruction of commodity markets that has now gone into the banks, that will now trickle on to other things like the tech sector. Has anything really fundamentally changed to move the tech sector down? I mean, I'm kind of a specialist in it, and I think, you know, would the stocks moving down 10% would have been okay? Yeah. Did anything indicate that LinkedIn would drop, you know, 50% in price? Data, any of those other companies? There was nothing really in the charts, nothing else out there. And that is the problem with any of these kind of mechanisms, the Fed, other things that last too long. And that is the tree kind of is like a tree out back. And the ants had gotten into it and eaten the center out of it out. And you know, basically when I went over there to cut it down, it was nothing. I mean, I was glad it didn't fall on my car one day when the wind was blowing or something. I found out that the tree was hollow inside. And that is the problem. And so as people are lining up and sending me more and more emails today, I'll try to get to all of them. The question is, how low can it go? And the question is, how long will it take until the markets realign themselves with reality? And that $6 tomato that we talked about over a year and a half ago in Brazil gives you the indication and the problems that what everybody thinks will solve all the world's ills will not. And I want to thank everybody in the den for actually putting it back up here. The road to hell is paved with good intentions. And that's what my friend's Catholic mother would always say. But the whole idea of price volume trading may have been tarnished over the last few years. A lot of people said it no longer worked. I think that it still worked. You just had to look a little deeper these days. I had to look into the actual stocks in any index, high-frequency traders. Also, you never know just how far and deep the Fed or the Treasury's involved in market manipulation efforts of their own. I would say that it is statistically not likely that they weren't playing around with the market and markets behind the scenes, i.e. the man behind the curtain. And all those problems will also come home to roost one day. But very, very interesting stuff out there. Anyway, I'm going to probably reread that book again and do an article on it. But it's basically that commodities and, you know, like crude, we never thought it could get that low. It's almost incomprehensible. And the reason is that there is no feedback mechanism. So we don't know how low it can go. What we need is the Fed and the Treasury and the central bankers to walk away, and we all know that they will not. They will continue to fiddle while Rome burns, and what they really need to do. In fact, I learned this when I was learning to fly. My flight instructors have said, okay, you know, you've got the plane at a indication. You don't know what you're going to doing. You're going to crash it. You know, this plane's actually designed so it'll kind of fly by itself. Just take your hands off of everything and leave it alone. And guess what? The plane kind of nosed down. The airspeed picked up. There was more lift over the wings. The nose started to rise. It went a little too high. The plane slowed down. The nose dropped, went a little faster. As it went faster, the nose came back up. You know, within about 30 seconds, the plane was flying straight and level, and probably better than I could have flown it myself. And right now, the question I'm getting a lot is, how low can this market go? And my guess is that it can continue to go lower until the morons take their hands off the stick and let it self-level itself. Without price discovery, we are going to be in a massive problem of not letting this market settle. We are not going to have lower and definitive lows in the market. The good thing, we've got the first few steps from the Fed from doing the ridiculous crap they've been doing for the last 2 years that they shouldn't have. And they're starting to let their hand off the stick just a little. I think that Cessna 152 that I learned on would probably fly just as well in there still today if I would just take my hands off the stick. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're telling a bunch of really bad jokes in the den. Anyway, 1831 and change. We're down here testing the lows of the day on the S&P cash volume coming in at 2.6 billion shares. Just thought it was very interesting to see, and I'm thinking more about kind of a macro view of the markets out here. We'll get into the blow by blow of the markets today here. Chesapeake Energy halted twice. Last time I saw it was down $1. Let's get a quick check of it. And of course, the whole idea is whether or not these companies are going bankrupt. It's still off 33%. It's been halted twice. I don't know if this says 2031. I don't know if it's halted yet again. Doesn't seem to be. Yeah, it's moving. So I didn't know. Of course, they say that they're not going bankrupt. I'm wondering just how much this is like Baghdad Bob saying the American forces are not in the city. Or maybe just wishful thinking. You know, if you're going down on the ship, you always wish and hope that there's going to be another steamship that shows up in the North Atlantic before you dive in to the cold water. So I don't know if that's just wishful thinking on their part, but it certainly looks like without a major change in and a bottom in energy, we're going to continue to have a great deal of these stocks hit the skids. And of course, there's a lot of loans and cash behind this for the banks, and that is why we continue to see stocks actually pummeled today in the financial business. Amazon, of course, getting hammered today, but what we did see for a late Friday night was them basically saying how much money they're spending in and around Congress. Of course, the biggest lobbyist now in the United States is Google. Amazon is really ramping that up, and it's doubled its expenditures in 1 year from $5 million to almost $10 million to tell everybody. Mostly what they're doing is going after and trying to bug its competitors. And then, another thing is just greasing palms to make sure that they get a good deal for putting in many of their warehouses around and getting at least some of these places some new jobs. I know they gave a great deal to the shipping facility down here in Plant City, which is just east of downtown Tampa. Rather famous for its strawberry festival. But Amazon is getting busy lobbying. So let's go to some stocks of interest. And of course, Goldman Sachs, we don't know about it now, but the way it is acting tells us that there's probably a lot of liability outside of the U.S. markets. We never, just like the CDOs, no one ever really knew that Lehman had such huge issues out here. I guess by inference, we have to assume the way that it's acting. And of course, not a lot of retail clients own Goldman Sachs, so I can assume that most of the selling is institutional. One, it is liquid stock, so you can sell it. But two, I think a lot of those folks probably have dug through all the filings and know just where all the bodies are buried for Goldman Sachs and these other stocks. You know, we look at others. In fact, I posted it in the den a couple of times, but there were, well, in fact, let's go out and look at it. Portfolios. Give me just a second, go dig this up. But I wanted to go back through the Euro banks out here, at least the ones that are classically traded. But all these stocks are all, and things like Goldman Sachs, all have a similar theme, and that is that just like all these banks were leveraged to the hilt in the U.S. housing crisis, in the housing stocks themselves, except the ones that had already gone short because they knew it was a fraud, are all stuck in the same problem. Now, Deutsche Bank is another one of these companies that has huge problems, and those huge problems come from the money that they've lent in the Mideast. And a lot of these smaller companies are going to have problems staying alive. No reference to the 1978 movie. Or 1979. What was it? 1979? I think so. Maybe 1980. Anyway, I digress. Deutsche Bank, the rest of these, what else do we have out here? Let's just go and look at some of these, because I know most of the time we look at the U.S. banks. I don't see the direct implication of the U.S. banks in a lot of this. I see that maybe these U.S. banks have invested in these banks like Deutsche Bank, And that's why they've kind of bank shot into all the problems, especially a lot of the money that was spent in there. The problems with the loans made in the Northwest and the shale things tend to all be kind of localized in some banks in Texas. For the most part, I saw 80% of the losses should come from the Texas banks and not the big national banks, the ones that specialized in oil and crude. So we'll see those banks probably easily go bankrupt. But are any of those banks big enough to cause a Lehman moment in the market? The answer is no. Now, the problem is that there are a lot of these banks that are big enough to cause a Lehman moment in their own countries. Deutsche Bank, of course, is off 9%. And shows absolutely no sign of finding a low. In fact, that was one of our more people telling me the road to hell is paved with good intentions, because I couldn't remember it at the time. Okay. Numbers only. I'm just catching up on it. Can you look at a short opportunity? Okay, here it is. Warren from Denver asks, will DB break the $10 mark before the ECB steps in to support the price? And the problem is, I don't know if it makes any difference if they buy it. Eventually, those things are still going to come out on the balance sheet. So can they change it for the moment by doing some trickery with the EU or flushing cash into Deutsche Bank? I think they can. But I don't think it changes anything unless they physically give money to the to Deutsche Bank to cover these losses. Any loan is just going to mean that those losses don't show up later, but they just have a bigger debt. And my guess is that the EU is probably not going to dive into these banks, but let them suffer a little bit more so that maybe they don't do the same stupid thing next time. It would have to get, I think it would have to get a lot worse before the Euro banks actually, the Euro people actually hop in. And when they hop in, they're probably not going to go and surgically work on Deutsche Bank, but they'll do something like that's got them even in worse problems already, like negative interest rates have killed most of these banks. We talked about that last week. But they'll probably do something to try to get the economy going. Will it bounce? Yes. But eventually, it will all come out in the wash. The books will have to be settled at one point. And I don't see if anything else changes out there. They need to get to whatever the real price discovery is on this. And until those books come out, it will not. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we had an email from Warren in Denver. Oh, that was right. And we're continuing on. I skipped ahead without reading the rest of his email. The largest institution, BlackRock and Alliance, how vulnerable are BlackRock and Alliance? I'd have to do some digging to get into that. But my guess is that the problem is they call it iceberg risk, technically in the market. And that is you only see the top 10% of the risk above the water. The 90% of the iceberg is underneath it. And that's the real problem. You can't see all those connections in and behind the market, as we saw in 2008. You don't know how all those things are linked because they are not transparent to the market. We looked, a short opportunity out here with J.B. Hunt. He had kind of a big move down in this off of 93. I like that this bounced up to the gap and is now kind of moving down here a little bit. The only thing I would say for a short opportunity on JB Hunt would be if this thing could get back up to 75.18 one more time and run some shorts out. In fact, I want to look very quickly, if you'll give me a second. And I want to take a look and see just how many people are shorting this at the moment. I actually clicked on the wrong thing. Sorry. We'll be ready here in just a second. Got to get my program up and running. Probably should have just in this. Okay. I know there's a new version available. I don't need it. Okay. Quit. Okay. I'm not getting everything to cooperate with me today. Okay. Here, bin, debug, stock database. Bingo. Here I go. Okay, let's take a quick look at how people have been shorting JB Hunt. What you want to see is these guys. You got it. I'd go for it. You had a huge short interest on this thing on Thursday. Everybody gave up on Friday. You're back into the gap. I think I like it. You'd probably be looking at the previous low of January 15th, $63.58. And, I guess the one thing really keeping this stock up is, of course, the lower crude prices. Energy off the bottom is pretty good. That would connote that you had a lot of people short cover on this stock. And just like a lot of those stocks that actually got brutalized on Friday, the key to those things dropping as far as they did is that they'd run a lot of shorts out from previous bear runs on it. And this would be a nice setup. I think you could go after the $66 level for that gap and be pretty pretty good with that. So it's about $9 in it. You wouldn't want it to close above the low of the 7th of December, which is 75.70. So why it could get into that candle, you wouldn't want it to go any higher than that for a close. I think that looks pretty good. And we've got one more out here. You can always give me a call at 877-927-6648. Next we have UWTI. UWTI, he said. Jeff. And he says he's not from Lutz, although he didn't tell me where he was from, so he's from Lutz. Okay. Here's the ECNs for Credit Suisse, which, of course, another one of these banking Euro stock in problematic territory. Just not enough volume. Well, I guess there is fairly decent volume in this. Not a lot of energy out here, especially down on lighter volume so far today. I'd see how this thing closes out here today. I just don't see any of these that look to me like they're anywhere close to bottoming. I'm assuming that he's actually thinking about buying these. You need it to crack $1.41, and I don't see any other answer in a bear market like this than seeing it crack that and you having half of the volume. That was 130 million shares on January 20th. So if this thing had anything over half that, I probably wouldn't touch it. We're going to go to Paul from San Jose. How you doing today?
Hey, David. How you doing, buddy? I'm doing good.
Pretty good.
Right on, man. Hey, I want to take a look at Nugget, take this thing for a possible short. Just a short-term trade. I just want to see your opinion on that.
Well, first of all, I would say there are probably better shorts out there. This thing is probably going to 52.60. That's the October 15th, 2015 high. And the energy off the lows is much better than the downside. Why? I can understand why this thing could probably pull back a little bit, but I think that there's probably a lot of other stocks that I would short first, long before this one. I'm probably going to say that the key to getting this thing right would be the dollar moving back up. Without that, I think your trade would be a very hard road if profitable at all. What are we at? Dollar index tried to rally today, could not. The 96.66. I think if you wanted to make money on this, you're going to have to see the dollar index back in the 98s.
Okay.
And that I'd just say I probably know 10 stocks already I would short in front of this, even for a snapback trade. So there are a lot of things out there that are probably better. Can you make money on it? Yes. Can you make just as much money without as much risk? I think so also. So I would say on the street they have a saying, especially in the trading desks, and it's called change the name. That is, just look elsewhere for a while.
Gotcha. Hey, thank you for your opinion. I really appreciate it.
You bet. Huge move up. Could this thing come all the way back down? The answer is yes. I just would need one kind of huge confirmation, and that would be the dollar index back going up. I think we are, as we spoke at the very beginning of the show, continuing to have a lot of games played in the background. And until they leave their hands off of it, we're going to continue to see huge moves out of the blue for things like this. Now, they come out and actually do another rate increase. Could you see this thing cut by 50% of this last move? And I think the answer is yes. It is just very tough now to make the bet that a handful of people will do that. This is probably the worst part of these markets, and that is I can pretty much trade when I'm trading with a bunch of people making a bunch of decisions. When you get down to 3 or 4 people at the FOMC or one guy at the Treasury or what it's to do, I hate being in the stocks surrounding that. In the meantime, sell when you can, not when you have to. Watch out for that big, nasty bear. I'll be back tomorrow, same bat channel, same bat time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had, I got one more segment. I tell you, I was so tired from this weekend. I was, of course, watching the big game last night, and, of course, a lot of adult beverages and partying going on. Man, I tell you what, can those dogs play? What a wonderful puppy bowl again this year on the Animal Planet. We were all sitting here watching it, and, of course, you got to play drinking games with the puppy bowl. Anyway, up late nights celebrating puppies and on the Animal Planet, and I'm still tired. That's why I jumped the gun, hoping I had already done my last segment. From Steve from Colorado, Broomfield, Colorado. And he thinks that, what do you think of TZA? Looks like the S&P could go in the 1770 monthly trend line area. I don't know how low is. I'm pretty sure we're going to break all the lows out of the bottom of this market, at least in for the next week. I don't see anything that changes it. We've got earnings starting again tonight. I think that they could be as brutal as the ones from Thursday night into Friday. No one wants to hear any bad news whatsoever. And I think you got it. I think, of course, the step that we want to know and test is this January 20th high at 72.42. We've got the one gap up now. Could this be the start of one more 3 gaps up? You had that kind of back here on the 4th, the 6th, and the 7th of January. Could we do this one more time? I think we could. I think you could say that the gap up on the 2nd is the 1st. This is the 2nd again. And you could have yet one more gap above. But my guess is that you're going to get at least one more gap higher, and you're going to break that January 20th 72.42 high. You've got energy already that equals the energy down from the January 20th high to that February 1st low. So you got to say there's an 85% chance you're going to hit that January 20th high, 72.42. And I don't think that you could do anything else other than wait for that test. If you're long, you probably would consider selling there, depending on how everything comes in. If you are thinking about shorting, I would say that there are so many better shorts out here that I would look elsewhere. What else do we have going on here? Checking my mail just to make sure if there's anything else out here. Amazon. Someone wants me to look at Amazon who is not from Lutz. You're back into this gap today. We talked about this thing breaking that confluence level, and normally that's where everything goes to hell in a handbasket. We put our long-term traders in a short vehicle for all these FANG stocks and the other ones that are basically have been the big leaders. It's been a good trade so far, very profitable. So what do we have out here? We're gonna probably be looking at these gaps. Now, you had a big gap, but what you really had is the high volume low of August 24th for Amazon. That's 451. You got to hit that to begin with. What are we, 25 bucks away from that now? You got 7.6 million shares already. All you need is 10 million for that spike low and doji of August 24th. I don't see how you could bet that Amazon doesn't test this 451. I certainly could not put a trade on or take one off until that is hit. In the meantime, so when you can, not when you have to, watch out for the giant bear, as we said in the last segment. I'm just repeating myself because I was early last segment. And hang on for the Tom O'Brien Show for the next 2 hours.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.